Hello and welcome to another Bybit tutorial. In this tutorial, I am going to show you how you can do leverage trading on Bybit without engaging in futures contracts. I talked about futures already in another video, and in this video or tutorial, I already mentioned that there are a few ways of how you can actually do leverage trading on Bybit. And I already introduced you to the futures. With futures, you can obviously enter a long or short order up to 100x leverage. Now, I personally would never use that much leverage, and I would only recommend leverage to anybody who really knows what he or she is doing. It is something for advanced traders. However, this tutorial is not about judging leverage and talking about when to use leverage. It's purely a tutorial to show you how you do it. So I'm going to show you a way on Bybit via the spot market. So you can see this is the main dashboard. On the main dashboard, you can either choose here the perpetual futures if you want to do leverage, or you just go to trade, spot trading. And when you do spot trading, you can see that some of these tokens here or coins like Bitcoin, Ethereum are offered at a 5x leverage. So that means when you use an order, or when you engage in an order, when you start an order, when you execute an order like that, using 5 times leverage, you are still buying the asset. Yeah, this is completely different from futures, where, I mean, in the day-to-day trading, you won't notice a difference really. So if you do futures at 5 times leverage, or if you do spot trading at 5 times leverage, it is very similar. But still, the background is different. Yeah, on the spot market, you buy the underlying asset. Now, you still won't be able to move it to your hardware wallet because you basically have a contract with the exchange. You're borrowing money from the exchange to be able to trade with leverage here in this case. But you still buy the underlying asset. Whereas when you use futures, you're only speculating that the price of the futures contract is going to go up or down. So you're basically speculating. Yeah, and you're not buying an asset. I mean, when you trade on the spot market, you're speculating as well, but you buy the asset, which is different from futures, which is only a contract. So let's go to the spot trading dashboard, and I'll show you how you can actually do that, because it allows you also to short on the spot market, yeah, which is sort of different to some other exchanges where that is not easily possible. So obviously we talked in previous tutorials about how you can just place a buy or a sell order here on the spot market. And it is not much different from that. The only difference is that you don't choose spot here, you choose margin. Very important, few things to mention before we get into the mechanics here. You get an interest rate that you have to pay when using margin, because you are borrowing money from the exchange. You have to pay an interest rate. And here you can see your daily interest rate. You can get a complete overview on Bybit for your interest rates. If you click on margin data, you will find that on Bybit. You can just search for it on the Bybit page. And here you can see, depending on what kind of VIP level you have, or what kind of level you have on Bybit, that depends on, how many funds you have, what are your funds, and certain things. And then you can get, step up on the ladder and reduce your fees. But the most basic level is this one. And these are the daily fees and the fee, and basically a daily interest rate, yeah, and the yearly interest rate. And it changes depending on the asset. Yeah, and you can see here, if you compare VIP 0 to Pro 3, you pay a lot less in interest, yeah, depending on the asset. So, but that's just something that you need to be aware of, that you pay actually an interest rate, because that will obviously come off your profits, yeah, or it will add to your losses. Because very important, when you do leverage trading, and you should know what that means, yeah, it means you're borrowing funds or money from the exchange so that you can use more money to trade. It basically means that should Bitcoin go up, and let's say you don't use margin, you don't use any margin, and Bitcoin goes up 10%, then you have made a 10% profit if you have if you opened a long position before that, or a buy order before that. If you bought Bitcoin, it goes up 10%, you make a 10% profit. But if you use 5x leverage and you did the same thing, then you don't have a 10% profit, but you have a 50% profit. But unfortunately, it works the other way around as well. So with losses, it's exactly the same way. So also your losses will be multiplied. That means that the higher the leverage is, the more or the less predictable it is going to be and the more risky. So just be absolutely aware that you will also multiply your losses, because a lot of people think, right, I can make much more money. Yeah, but you also can lose much more money. So before you engage in margin trading, I would recommend that you get really, really profitable on just no margin trading. Yeah, I think that is important, and make sure that you know what you're doing in terms of risk management and money management and setting your stop loss. Because I mean, I hear it all the time. Buying cryptocurrencies spot without leverage, no stop loss, that's fine depending on what you're doing. If you want to move your cryptos on a hardware wallet or a software wallet, of course you cannot set a stop loss. But when you do margin trading, you will keep those coins on the exchange anyway, because you can't move them off the exchange. So you need a stop loss. It is for short-term trading anyway only, because you pay an interest rate. So you don't want to get that, last too long and eat up your profits or accumulate to your losses. And when doing margin trading, it is increased risk. So therefore, you should always use a stop loss. Okay, now that we've talked about that, how do you actually do that? So first of all, margin trading only enabled here on the spot market with 5x. So I don't think you can actually change that unless there is a token here that is offered at a different margin, with a different margin. I don't think so. Maybe you can comment if you found that. I don't think there is. And what you do here, you have the same possibilities of opening, like here, a long position or a short position, which means going long is obviously you're speculating that prices are going up, and you can set a market order or a limit order and a take profit stop loss. The same way the other way around, here you can actually short, and that is quite nice because you can actually here short on the spot market. And how do we do that? So very easy to go long, very similar to the futures tutorial I did. If we have a market order, you have a certain amount of, let's say, USDT on the exchange here. So let's say I want to open a market order with 25% of my USDT portfolio here, and I buy or go long on BTC, and I just do that. I just click on here and it will be executed straight away because it's the market order. It will be executed at the best possible price straight away. Now I don't want to do that now. Or set a limit order. When you set a limit order, it's the same way. You just select how many USDT you want to use. You click or you enter at what price do you want the limit order to be executed. So let's say I want to enter the market when the prices come back a bit, have guys come down a bit, because I believe it will come back into support. At the moment, the price is around 16,500. So, maybe I want to buy at 16,000. So, and then I click buy long, limit order. So it will not execute straight away. It will execute at that price. And then here under TPSL, take profit stop loss, you can actually set a take profit target or a stop loss. I talked about that in one of the other Bybit tutorials. And then you can go short as well. It's just the other way around. Market order, if I want to go short, so speculate that the price is going down, make profit by the price going down, then I can also select a market order. I want to short, and with 25% of my portfolio. You can actually see what you're borrowing here if you go in with 5x margin, and I go short. And you can also do that with a limit order. So limit order here. And again, I select when I want to go short. So maybe when it runs into resistance, maybe when it runs to that significant high here, so close to the 16,630 level, I want to go short. Again, I select the portfolio, the value, how much I borrow actually, down here as well. And then I go short. And it will be the limit order and it will show as open orders. And that's basically how you can go long and short using the spot market on Bybit by avoiding futures. And it's just a different model. It's just a different way of doing things. Another difference, or in contrast to the futures market, on futures you pay funding, yeah, which is also basically a fee, but it applies every 8 hours. So it's a little bit different here to the interest rate that you pay when just going or executing a margin spot order. Yeah, and that's basically how you can do that on Bybit. Hope you liked the tutorial. If you like to support the channel, you can find a link to Bybit in the video description and in the comment section as well. So that's a link that you can use if you do not have a Bybit account yet, and if you want to open one. They sometimes offer a bonus, a sign-up bonus that changes like every few weeks or every month. So best to check that out when you click on the link. And other than that, hope you liked the update. If you did, please hit the like button, leave a comment and subscribe, and see you in the next video. Bye bye.